Are you planning on buying a car? Well, your interest can be written off. Under the one big beautiful bill or one threeb or Trump's tax bill, whatever you're calling it. I'm not here to be political. I'm just here to tell you what this bill says today regarding no tax on your interest for your car loans. My name is Paul Vasquez, and you need to become an ethical millionaire. So let's get started with this bill. Let's take a look. So here we are, right here, section 70203, no tax on car loan interest. So some things right away, right here for tax years 2025 through 2028. So what that means is there is a limit on this one. Some of them are permanent. This one is for a certain time period. And the time period actually starts December 31st, 2024. So that means this year, right now, even before, if you bought a car this year, doesn't have to even be a new car. I didn't see anything in the bill that made it say the car has to be manufactured in this year or completed in this year or assembled in this year. Nothing about the time frame of when this vehicle needs to be created. Only when you entered into the loan regarding this. Now, don't be tricky. They took into account some of what you think is going to be a little trick here. So here we are, exceptions. That means these don't count. A loan finance fleet sales. So, if you're buying lots of cars for your fleet, for purchase of commercial vehicles, you can already write off your interest on the purchase of a commercial vehicle if the loan is in the name of the company and the title and all that stuff. Although there might be a better way to go through that. Okay, well, I don't want to get too far off on this. A loan to finance a purchase of a vehicle with a salvage title. So you can't go out and get a loan on a car that doesn't work just to write off the interest on it. Loan finance for the purchased vehicle intended for use of scrap or parts, right? So it has to be something you're going to be putting on the road. Interest shall not be treated as a qualified passenger vehicle loan interest under this paragraph unless taxpayer includes vehicle identification number on the tax return. So there's a lot of limitations and provisos on this. I'm going to go through it all right here so we can get like a full accounting of this. But if that's all you want, you can keep scrolling on your merry little way. But if you really want to dig into what the limitations are, what you can and can't do, this is what we're going to be doing. Now, our next limitation is that this cannot be more for $10,000 in any 1 year. And you kind of probably know what the next limitation is there's an income limitation. So like so many of these others, if you're making 150, sorry, not 150 on this one, 100. If you're making $100,000 as an individual or $200,000 as a couple, you begin to get knocked out of this. They're doing the same rundown where if you make $101,000, now that $10,000 limit drops down to $9,000 that you can write off. So think about what kind of vehicles you're going to have to get in order to get to that maximum. Most loans are amortized over the period of their life. The vast majority of car loans are like a 5-year car loan. So you're doing 5 years. You're paying the bulk of the interest up front early on that loan, and then little by little you're paying more and more of the principal as it ages. Now here's some interesting things here. They go further to qualify which vehicle types pass for this rule. It says it has to have at least 2 wheels. So here we are, it's saying that motorcycles qualify. Motorcycles will qualify for this. Car, minivan, sports utility vehicle, truck, even motorcycles. Now, they give a proviso that it has to weigh less than 14,000 pounds. So you're not talking semi-trucks, most likely. And of course, they say the final assembly has to happen here in the United States. And I know what some of you are thinking. Maybe I can just take a loan out from a relative. No, you cannot be a related party. They say so right in this bill, which means it can't be you in a different form. So, yeah, not there either. They have these kind of compression, or I forget the actual name, where if it is basically the same thing in one step as it is in 20 steps, but they just collapse the steps down into one, and it turns out that that one step would be against the rules, you don't qualify. So you can't go out there and like create like this web, because as soon as that's exposed, they're going to say it never should have been approved to begin with. So that's kind of like a tax evasion, tax fraud kind of thing. Now, here's where it gets even better. You do not have to itemize your tax return to get this. So that means you don't have to do a Schedule A. You don't have to weigh this out against your standard deduction. You're going to get this anyway. So what does that mean? That means that before, and this ends 2028, so January 1st, 2029, that's it. So if you're going to be buying a car anytime soon, from now until 2028 is a good time to do it, because you're going to be able to write that interest off. Now, that does bring up an interesting point. Does the loan have to be, I'm taking it from what this says, even if you bought that car the last year, you're only going to be able to write off the interest for that year. I mean, luckily, like I said, with amortized loans, you're paying the bulk of the interest in that first year. So, but how many payments are you getting if you bought it at the very end of it? So probably the sooner the better if you're going to be getting a new car. So we could see car sales jump up a little bit because of this rule. And once again, this is just the interest. So if you buy in cash, it's not going to matter. If you buy from a related party and you do a loan, not going to matter. Yeah, and if you're already well off, you probably might not qualify for this anyways. So if you're getting a really, really expensive car, there's a chance that, well, that interest is not going to be written off. When they knocked out, if you're leasing, so no leases, you actually have to be get a loan on this. Doesn't specify the terms of the loan or anything like that. But yeah, so it's going to be interesting how we end up seeing this written on a tax return. Once again, I think with all these changes, it's going to be that much more important to find a tax professional this tax year. We're here at Tax Lab. We can help you from all over the nation. I think we're limited to 10 right now from New York. So if you want to get on board, we'll hold your place for you. Just send in a deposit, and we'll lock you in as one of the 10 for New York state. And that includes New York City. But in that, we're pretty much open nationwide as far as doing some tax prep. So if you want a professional to make sure that we're getting you all these deductions that you qualify for, we can do it then. Even better, let's sit down and create a tax and financial plan for you. Let's show you how we can put in place the things you need to do now to qualify it before the end of the year. Right? Once the end of the year comes, that's it. We don't get into the, let's pretend kind of thing. As soon as you tell me let's pretend or let's just say, can't we just say, sorry, I'm not your guy. We don't deal with that. It's either it was or it wasn't. That's it. We're not the IRS police, but we don't help you defraud. Anyways, we like ethical millionaires. That's what we're trying to do. Lab.tax advisory services, free 15-minute introductory video call or voice call to see if working with us is right for you. I wish you guys all the success.